Chicka chicka JV. Blood on the streets. Buy the dip. Bitcoin sale. Take advantage of it. In today's show, I'll be breaking down the latest Bitcoin technical analysis. We ain't seen a crash like this since 1987. But guess what? New record Bitcoin hash rate. Biddy price follows the hash. And quoting the high priest of Bitcoin, Max Kaiser, China, Russia have a card up their sleeve to fight the U.S. tariffs. That's the gold-backed stable coins that start a run out of the U.S. banks and U.S. dollars. We'll also be discussing billionaire investor would not be surprised if the Trumpster postpones the tariffs. We'll also be discussing nearly 400,000 FTX users risk losing $2.5 billion worth of repayments, as well as U.S. tech sector about to witness an economic Armageddon amid the Trump tariffs. We'll also be discussing rich dad Robert Kiyosaki warns of the biggest market crash has arrived, suggesting 3 non-Wall Street assets to weather the storm. We'll also be discussing, here's Michael Saylor's Bitcoin price prediction if we hit the 500 trillion market cap. And I know it sounds crazy to discuss at this moment, but you already know we'll be discussing the latest from the Giga Chad, Mikey Saylor. We'll also be taking a look at the overall crypto market, all this plus so much motherfucking more on today's live stream. Blood on the streets, fam. If you're new to the channel, important, smash the likes, go ahead, subscribe, then ring the bell, turn on all notifications to receive daily premium crypto news alerts every single day, 7 days a week, just like this. Happy Sunday, fun day, blood on the streets in the market. As you can see, preload Biddy down $3,300 on the day. Massive crash across markets. Today is April 6, 2025. I'm your host, JV, and today is pod episode number 1955. Let's kick it off with our market watch. We'll start with Coin 360. Should be able to see here on your screen. Bitcoin down 4% on the day. We also have Ethereum down 9%, all the way down to 1,600. Craziness. XRP down 6%, trading back under $2. Solana down 9%. Some of these alts down over 10%. Complete bloodshed, carnage, and wreck city in the alt market. And checking out coinmarketcap.com. The current crypto market cap all the way down to 2.53 trillion. Bitcoin market cap all the way down to 1.579 trillion. We got roughly 69 billion worth of volume in the past 24 hours. The volume's actually up roughly 57% on the day. Here's the silver lining. Bitcoin dominance is up. Currently 62.5%. Ether dominance, the lowest I've seen it in like 5 years, 7.8%. Womp womp for the ETH holders. Checking out top 100 crypto gainers past 24 hours. We got the Pi Network leading the pack, followed by EOS, followed by Zcash. Very modest gains as 95% of the market is correcting and in the red bloodshed. And checking out crypto bubbles, we get a visual perspective on the day. It's not like we really need it. Virtually everything bleeding, unfortunately. Zooming out on the weekly, very similar scenario. Zooming out on the monthly. I mean, some of these top alts down 20, 30, 40 plus percent. Checking out the Crypto Greed and Fear Index. Today we're at 34. Fear yesterday at 30. Last week at 32. Last month at 34. Checking out the infamous time chain calendar. We're currently on block height number 891,206. We have 158,794 blocks into the next halving in 2028, and you currently exchange one fiat monopoly dollar for 1,257 sats. Pick up the sats, put down the gats, pick up some Bitcoin caps from my man Sergio, of course, over at bitcoincaps.net. And if you don't know, now you know, broskies. Bitcoin falls below 80 G's. Will Pi, OKB, GT, and Atom outperform Bitcoin in the altcoins? Who cares? I doubt it. Altcoins rarely outperform Bitcoin when we're dipping, but whatever. Last week, Bitcoin began showing early signs of decoupling from the U.S. stock markets. Bitcoin was relatively flat over the week, while the S&P plunged 9% and losing like over 5 trillion in the stock market. The sell-off was maybe even 10 trillion because it was 2 back-to-back bloodshed days. The sell-off was triggered by the following of President Trump's April 2nd global tariff announcement, which escalated further April 4th as China retaliated with new tariffs on the U.S. goods. Even gold was not spared and was down 2% on the week. Did you hear that, Peter Schiff? Now, Alpine Fox founder Mike Alfred highlighted in a post that a gold market is bullish for Bitcoin. And during the previous cycle, gold led the Bitcoin for a short while, but eventually Biddy caught up and grew 10 times or more Then gold. That's right. We 10x. He added that it would not be any different this time. And if we were to 10x from ADGs, we're talking 800,000 per pretty little bitty. And although short-term outperform of the Bitcoin is an encouraging sign, traders should remain cautious until further clarity emerges on the macroeconomic front. If the U.S. stock market witnesses another round of the selling, crypto markets may also come under pressure, which precisely what's happening. A handful of the alts are showing strength on the charts. I dare say no. Virtually everything's in the red right now, but Bitcoin bulls have failed to push the price. My understanding is, being these altcoins are featured in the headline, the owners probably paid the news source to feature them and talk positive about them, which is very common with a lot of article sources. That's why you got to be very sus on anything you read. And you're lucky you got me as your presenter to see through the bullshit. And let's just stick to the bitty here. Bitcoin bulls have failed to push the price above the resistance line, but they have not ceded much ground to the bears. This suggests that the bulls have kept up the pressure. The pressure's on. It's a hit. The 20-day exponential average, currently 84, is flattening out, and the RSI, Relative Strength Index, is just below the midpoint, signaling a balance between supply and demand. This advantage will tilt in favor of the bulls on a break and close above the resistance line. There is currently resistance at 89, but if that level gets taken out, the Bitcoin pair can ascend towards 100 Gs. Well, we're currently nowhere near there. The 80,000 is the vital support to watch out for, which we just broke below to the downside. If that level cracks, next eye on the prize is 76.6, so which is pretty much the local low we have seen a couple of weeks ago. And if that doesn't hold up, we're likely to revisit 73 and most likely retest the previous cycle all-time high of all the way down to 69. Jeez. Here's a 4-hour chart, but what I'd love to do is actually pull up the live charts. But first, I want to read you some of the silver lining. New record Bitcoin hash rate. Even though we're plummeting, the hash rate just hit a new all-time high, and as you know, the Bitcoin price follows the hash rate. Max Kaiser points out that China and Russia have card up their sleeve to fight the U.S. tariffs, the gold-backed stablecoins that start to run out of the U.S. banks and the U.S. dollar. He also recently tweeted the deflationary era of the globalization is over. We have entered an inflationary era of deglobalization. Americans will be shocked at how high the prices go, and many will be impoverished. The era of financialization, starting with Reagan and Thatcher, was the foundation of this painful reckoning. Bitcoin is the only thing that can preserve your wealth and purchasing power. And there you have it. The high priest has spoken. And I promised to pull up some of the live charts. Let's do that really quick. Live chart action, Jackson. And don't forget to pump the likes, family. I appreciate it. So yeah, as you can see, here's the 1-hour chart. You can see 3 consecutive bearish red candles that took us all the way down to the 78 level. And we're recovering a bit, maintaining just above 79.5 at the time of the live. We do have a bear scenario sitting at 73. Let me know where you feel the bottom will likely be. Or do you think the bottom is already in? Holla. And zooming out a little further, we take a look at a 4-hour chart. Says you can see a huge red candle, and happy 420, by the way. A few different bull scenarios on the board. One at 113.7, which take us back above price discovery, and we also have one sitting at 105.5. We have a bear scenario 73.5. Which direction do you think the pretty little bitty will head next? Let me know. And zooming out, we check out the daily. The daily chart says we're going up forever, Laura, but we got a temporary setback. Rising wedge bull scenario in the blue sitting at 128. Good Lord, that's a good target. Sender, let her rip. We have a red target sitting at 113 and a green target at 113.7. A few bear scenarios, one at just shy of 69. We have one at 49, and good Lord, $34,000. That's wild. And zooming out from there, we take a look at a next chart. We look at the weekly. As you can see here, we still have the cup and handle target of 124. Obviously, we dropped a lot. Currently trading sideways. $1 million question becomes, do we continue dropping, testing lower lows, or are we likely to bounce back? You guys let me know your thoughts. I think with all this tariff crap, I don't think things are going to recover miraculously, by tomorrow. I think it's going to be a very bearish week, but we shall soon see. I don't have a crystal ball, obviously, so you guys let me know your thoughts, and I'll read your comments out loud. Let's discuss a little deeper the Trump tariffs. Of course, after the infamous freeze frame. Billionaire investor would not be surprised if Trump postpones the tariffs. That's right, crypto-friendly billionaire extraordinaire investor Bill Ackman is considering the possibility of the POTUS pausing the implementation of the controversial proposed tariffs on April 7th. Quoting him here, one would have to imagine Trumpster's phone has been ringing off the hook. The practical reality is that there is insufficient time for him to make deals before the tariffs are scheduled to take effect. I would therefore not be surprised to wake up on Monday with an announcement from POTUS that he has postponed the implementation of the tariffs to give him time to make deals. On April 2nd, Trump signed the executive order establishing a 10% baseline tariff on all imports from all countries, which took effect April 5th. Harsher reciprocal tariffs on trading partners in which the U.S. had the largest trade deficits are scheduled to kick in April 9th, which I guess would be this Wednesday, right? Yeah. Now, Adkin, who famously said crypto is here to stay after the FTX collapse in November 2022, said Trump captured the attention of the world and U.S. trading partners, backing the tariffs as necessary after what he called an unfair tariff regime that hurt U.S. workers and the economy over many decades. Following Trump's announcement April 2nd, the U.S. stock market shed more value during the April 4th trading session than the entire crypto market is currently worth. That's crazy, right? The fact that crypto held up better than the U.S. stock market caught the attention of both crypto industry supporters and skeptics, quoting Cameron Winklevoss, founder of the Gemini Exchange. For 50 years, our country has been sold out Main Street in favor of Wall Street. Past presidents have relentlessly pursued globalization, deindustrialization policies that favored capital and decimated the American middle class. Time for change. Tariffs are going to reset bad trade relationships, build back the middle class, and make America great again. If it requires short-term pain in the form of a market sell-off for long-term nation-saving gain, then I am okay with it. Let me know if you agree or disagree with one of the Winklevoss twins there. Ackman said a pause would be a logical move by the Trumpster. And also let me know if you think he would do a pause. He says here, the risk of not doing so is that the massive increase in uncertainty drives the economy into a recession, potentially a severe one. What if that's the goal and they're just achieving their target? That's my question for you guys. Let me know your thoughts. And do you think there will be some form of pause on tariffs, or do you think things will continue to move as they are and things will get a lot worse and potentially push us into a recession? Let's move into our next story of the day with the FTX repayments. I guess if you were affected and you're expecting a repayment, you need to submit your KYC info or you will not be repaid. As headline reads, nearly 400,000 FTX users risk losing $2.5 billion in repayments. That's right. Roughly 392,000 FTX creditors had failed to complete or at least take the first steps for the mandatory Know Your Customer verification, according to the April 2nd court filing. That's practically everybody. So it's like no one's getting their money back. It's crazy, right? FTX users originally had until March 3rd to begin the verification process to collect their claims. If a holder of a claim listed on Schedule 1 attached thereto did not commence the KYC submission process with respect to such a claim prior to March 3rd, such claim shall be disallowed and expunged in its entirety. So it sounds like everyone's about to get screwed here. That really sucks. The KYC deadline has been extended now to June 1st because no one's been filling it out, giving users another chance to verify their. People rather not give up their personal KYC info than get their money back they lost in FTX is what that tells me. Those who fail to meet the new deadline may have their claims permanently disqualified. And according to the court documents, claims under 50,000 could account for roughly 655 million in disallowed repayments, while claims of over 50,000 could amount to just shy of 2 billion, bringing the total at-risk funds to more than 2.5 billion. The next round of the FTX creditor repayments set for May 30th, with over 11 billion expected to be repaid to creditors with claims of over 50,000. Under FTX recovery plan, 98% of the creditors are expected to receive at least 118% of their original claim value in cash. Now, keep in mind, they all get screwed because hypothetically, if you had one Bitcoin stuck on the exchange in 2022 and they collapse, you're not getting the one Bitcoin today worth about 80,000. You're getting the fiat equivalent at the bottom of the market when it was like 18 Gs. So they couldn't have fucked people more. Many FTX users reported problems with the KYC. So there you have it. Some people probably can't even submit it because it's like a big scam continuous. It's insane. Users were unable to submit their KYC documentation and resubmit their app and restart the verification process. So they screwed everybody. Not a good look, Bankman-Fried. Not a good look. Impacted users should email support@ftx.com to receive a ticket number. Good luck with that, with 400,000 in the same situation. FTX Bahamian subsidiary, FTX Digital Markets, processed the first round of repayments in February, distributing $1.2 billion to the creditors. The crypto industry is still recovering from the collapse of FTX, and more than 130 subsidiaries launched in a series of insolvencies that led the industry into the longest ever crypto winter, which saw the Bitcoin price bottom out at 16 G's, baby. And while the market moving catalyst in itself, the beginning of the FTX repayments is a positive sign for the maturation of the crypto industry, which may see a significant portion reinvested into crypto. Chief Operating Officer at BitGet shared, but there you have it. There's the latest with the FTX repayments. How many of you were impacted by FTX directly? Let me know. Shinku Goiki says, hurry up, JB. The song is litty. Cheers to the roaring kitty, that boring kitty, not me. I'm for the bitty. I'm for the nippinator. I'm for Nipsey. This gong strikes for you, brother. Next story, here we go. Let's discuss a little economic Armageddon after the infamous freeze frame. Headline I just read, Dan Ives, the senior equities analyst over at Wedbush Securities, says Trump's tariffs will likely lead to the collapse of the U.S. tech sector. In a new CNBC interview, he said Trump's sweeping and reciprocal tariffs are bad news for tech companies, particularly for firms relying on China for parts and labor. Last week, I wonder if the iPhone prices are going to skyrocket now. Last week, Trump issued an executive order imposing a 10% tariff on all imported goods entering the U.S. With the stated goal of safeguarding domestic manufacturing. Trump's executive order also details country-specific tariffs, leading to a cumulative 54% tariff on Chinese imports. And as you know, everything is made in China. According to Ives, U.S. tech firms like Apple are now under pressure to rethink their business model amid the potential increase in production costs. Quoting them here, it's essentially an economic Armageddon if these tariffs stay in place. The reality of talking in front of the microphone in a 202 area code is a lot different than the reality of moving the supply chain. And I think it speaks to our point that when you look at the China exposed names from NVIDIA to Apple to any semiconductor names, this is as nervous as I've seen investors going back to the Novid in March of 2020. I've said he sees tech firms responding by the hike in prices leading to demand destruction, quoting him here. If they hold in their current form, then essentially you have 15 to 20% demand destruction across the board in terms of costs that are actually going to have to come through. The wealth management executive says that at the end of the day, American consumers will bear the brunt of Trump's tariffs, quoting him here. Whoever is going to pay it, it's the consumer, and that's the reality. You can talk about the tariffs all you want. Consumers are going to pay it on the iPhones. They're going to pay it on the electronics. They're going to pay it across the motherfucking board. On guard. I'll let you try my Wu-Tang style. And there you have it. Here's the latest from Rich Dad, Mr. Robert Kiyosaki. Headline reads, Kiyosaki warns of the biggest market crash has arrived, suggests 3 non-Wall Street assets to weather the storm. Says that the stock market meltdown that he predicted years ago is finally underway. The best-selling author goes on to share, in my book, Rich Dad's Prophecy, I warned that the biggest stock market crash in history was going to wipe out the financial security of millions of investors. That stock market crash arrived today. We are definitely in a recession and more than likely a depression. Now, what do we define with depression and compared to recession? Let me know, guys. Kiyosaki says he sees 3 non-Wall Street assets coming out on top amid the stock market collapse. What can a person do? Here's what he says. As I have been suggesting for years, I suggest looking at non-Wall Street assets. For many years, I have suggested saving real gold, real silver, and today, Bitcoin. And let me clarify, I think when he says real gold and real silver, not the derivatives, which are the paper notes claiming you own some, but actually holding on to the real asset. And today, Bitcoin. And notice the Bitcoin is all capital. Kiyosaki says that the Fed and the Treasury will likely debase the U.S. dollar in an effort to prop up the economy. He notes that the U.S. dollar debasement will lead to inflation and higher prices for scarce assets like gold, silver, and Bitcoin. Why? Because after the paper market crash wipes out millions of the fake paper assets, exactly, odds are the Fed and the Treasury will turn the printing presses on full speed, printing trillions in fake money, which becomes even more fake, and real money, gold, silver, and Bitcoin, go up in value. Now remember, gold, silver, and Bitcoin are not going up in price. What is happening is the dollar is going down in value, causing everything of value, such as food, housing, and energy, to become more expensive, aka inflation on the nation. And take care, there are going to be rough storms ahead. And I think he makes a great point. I think there's no stopping inflation, especially at this point. Now for our feature story of the day. Here's the Bitcoin price prediction from Michael Saylor. If Bitcoin actually hit a 500 trillion market cap, and I understand market cap today is like 1.5 trillion, so this is very bullish, but nonetheless, we're going to entertain it. Let's discuss it. I mean, here's the Giga Chad right here. Look at that smile, that grin on his face. That's right. Bitcoin price can hit a multi-million-dollar value if Strategy Chairman Saylor's 500 trillion market cap comes to fruition. Market analysts have made several price assertions about the pioneering crypto, but none that have matched the bold calls from Mikey Saylor, Strategy Executive Chair. A few months after predicting a surge to 13 million in 20 years, the Bitcoin evangelist, aka the Bitcoin alchemist, recently upped his outlook. The Crypto Basic reported that Saylor placed a high-end bet that the Bitcoin market cap will hit 500 trillion. And just to give you some perspective, I believe there's like the total addressable market of like all the money in the world is like 900 trillion, which virtually means like one out of every $2 in existence would be inside Bitcoin. Despite seeming glaringly daunting, he has remained unwavering in his Bitcoin bullishness and long-term ambitious projections. My ambitions as a ride. This piece analyzes why Saylor shared this view and its price implications for the pretty little bitty going up forever, Laura. Interestingly, Saylor claims that the Bitcoin revolution is unstoppable. I second that. Branding it as the 21st century asset, he based his 500 trillion market cap prediction on a capital shift from several financial vehicles to the leading cryptocurrency. The strategy executive noted the liquidity will flow from foreign fiscal and 20th century assets into the pretty little bitty. He predicted that the asset would demonetize every long-term store of value, including gold and real estate. And quoting Max, gold is the poor man's Bitcoin. And furthermore, Saylor suggested that Bitcoin is the next evolution of money and would stir a shift from physical to digital assets, attracting staggering inflows from legacy financial instruments. And as a result, he urged the U.S. to stay ahead of the curve and acquire 25 to 30% of the assets total cap. That's right. He was recently at the White House for the crypto summit and proposed to Trump and his team, you need to purchase 25% of the Bitcoin supply, which is 5.25 million of the pretty little bitty. Meanwhile, if Saylor's assertions prove true, Bitcoin's limited supply property could spark a supply shock, catalyzing a parabolic price expansion for the premier asset. Notably, recent escalating interest in Bitcoin amongst nations and large financial institutions suggests it can attain the level of demand of the strategy co-founder projects it. For the uninitiated, Bitcoin has a current circulating supply of 19.84 million and a fully diluted supply of 21 million, baby. That's a blackjack. Hence, a hypothetical market cap of 500 trillion is about 30,860% off its current valuation of $1.615 trillion. Using its total supply of 21 million BTC in the equation that an asset's price is a function of the market cap divided by the supply, the bitty price would hit $23.8 million per coin. At a 500 trillion valuation, I think it would be way higher. Personally, I think it'd be 100 million or more, but that's just me. However, a calculation using the current price circulating supply of 81,000 and 19.84 million would see Bitcoin hit an impressive 25.2 million per coin at a 30,000% surge. These projections remain largely speculative, of course, at press time and should not constitute investment advice. In fact, I dare say there's never investment advice given on this live stream. Everything I share is for entertainment purposes only. Whether we're projecting Bitcoin correcting or soaring in the future, do make note of it. Bitcoin is superior savings technology, but there is no guarantee on anything in life. There's no guarantee we wake up tomorrow, and that's just a fact, Jack. And so with that being shared, let me know your thoughts, and where do you feel the pretty little bitty would likely go, just hypothetically speaking, if all that money in the world, 500 trillion, flowed into the market cap of Bitcoin. I'm going to say 100 million per coin, and I'm sticking to it. And if you don't know, now you know. Welcome everyone to the Q&A segment of the live stream.